My friends, what is going on? Long time no see. Welcome back to the channel. Hope you are doing well. Today's video I posted on Twitter earlier today. I was going to be doing a video over some stocks, and I told people, tell me which ones you want to see. So I'm going to kind of go over some of the popular ones. I also want to talk about, we got Apple earnings tomorrow. The GDP numbers are going to be coming out. So overall, I just wanted to look at a couple of charts, kind of give you an overall idea of what I'm thinking. If you're new to the channel, then number one, thank you for stopping by. Please leave a like, a comment, subscribe, all that YouTube stuff. I'm going to start rolling out more of these videos, just talking about different great setups that I find. If you've been with me for a long time, you know that primarily before my channel was all about AMC. I'm still a stockholder in AMC. I just kind of decided I wanted to move on as far as posting great plays and great setups, because that's what I do. I'm a technical trader, and just I felt like I was wasting my time only talking about AMC all the time when there were lots of other great setups. So I am going to start doing more videos. I will talk about AMC a little bit, but for the most part, it's going to be just great setups in general. So having said that, nothing I'm giving you is financial advice. Everything is for educational and entertainment purposes only. If you haven't done so already, please follow me on Twitter, Colin_Gladman. Also, too, if you're ever interested in joining my Discord, shoot me a DM on Twitter. No, it is not a free Discord. It is a paid Discord. I'll just get that out of the way right now. So, but shoot me a DM if you're interested, or go read my pinned tweet about it and let me know if you want to join. So right now, looking at futures. So futures has been playing out lots of beautiful technical patterns right here. It was in essentially this descending channel right here. They got a break towards the upside, and now we're kind of in an ascending channel. Excuse me. Typically, these ascending channels or descending channels are going to play out a lot like your rising wedges or your descending wedges. So the big difference is going to be where the descending wedge is going to come to a point, and the ascending wedge is going to come to a point. It's just all about what direction that they play out in. So, like, here's a perfect example. Here was an ascending wedge that then dumped, turned into a descending wedge that got the push out above that. So while futures has been pumping here recently, I do think it's only a matter of time before essentially it's going to bounce around this channel. Then you're going to get a breakdown, probably a retest, and then a further push down. If you do follow me on Twitter, you know that I believe the overall bottom of the market is not in yet. I think a push down to around 350 to 330 on SPY is going to be, towards those pre-COVID highs, is eventually where we're going to try to find a bottom. So when looking at SPX, actually I tweeted out 8 days ago, October 18th, I tweeted out 8 days ago that I thought my most likely, once we broke out of the channel, so once this bullish move did start, that somewhere between 380 to 395 is going to be where the move starts to terminate. The reason that I thought this is because if you pull an inverse fib from essentially where that channel started, all the way down to its low, then you see this golden pocket, the 618 right here, begins at 38.68 all the way up to 38.89. So as of right now there's no guarantee, of course, that the bottom is in. The reality is, my friends, is whether or not the bottom is in is purely going to be on what are the GDP numbers tomorrow, and then what are Amazon and Apple earnings going to look like. That, to me, is going to be what determines whether or not there's more gas in this tank, or if we've seen the overall exhaustion. My personal opinion is I think we've pretty much seen the end of this move, or it's pretty close. We might see a little bit more. I'm kind of an opposites here from a standpoint of, for instance, if GDP numbers come out pretty decent and we see a pump all day into tomorrow, then I think potentially we're going to see a fall on Amazon and Apple earnings. And the reverse is true. If GDP is bad and that gets kind of pushed down, then we might see one more pump up after Amazon and Apple earnings. But it's hard for me to grasp why Apple would have good earnings. All they've talked about is, demand down on the iPhone 14, and they talked about, pulling back on production. But, Anyway, sorry. I know these videos can be a little all over the place. I don't plan when I get home from work. I jump in front of the computer and we gonna sit down. We gonna make it. So it is what it is. I appreciate if you're following along. But the reason I thought this move would probably terminate is we had this obvious supply zone area where it was hanging out before. So typically, not always, but typically, you come back up, you test this area. The most common thing that's going to happen is you're not just going to blast through former resistance. You're going to have a push down. So I would definitely describe this as we are in a supply area right now. So how you would look at that is, well, what are my potential downside targets? Well, then you do a fib from your swing low up to your swing high. Let me just hide this bigger one here so that way it's not too confusing. So your most bullish thing would be coming down here to maybe around the 236, and you can see why that might be potential, because you had this area that was previously resistant. So it did pretty much, you got a little bit of chop right there, but then it blasted on through. So coming down here and coming back to about 37.89, or even all the way back down here to the 382 at 37.30. Those two areas are going to be your most bullish areas where you want to see some of your support areas. So if you come down here and let's say you come down here to the 382, then get another kick up, then there might be a little bit of gas left in the tank for this move upwards. Like I said, overall, eventually, I think we're going to see a lower high than up here and up here. So that's just my personal opinion. Could be wrong. Always happy to be wrong. Your most likely is going to be coming down here to at least the 0.618 at right around 36.37. But if it starts, let me get rid of this path. But if you start seeing this, then you make another lower high, and then if you start seeing that kind of motion, lower lows are, in my opinion, are 100% going to be coming, okay? So, look at that. That might even make like a little head and shoulder pattern right there. But overall, that's what I'm going to be looking for. Another reason that I'm going to be bearish overall is because the dollar is looking stronger here. It looks like, obviously, while the stocks have been pumping, the dollar has been going down. The dollar looks like it's really starting to round out right here. This is on the 15-minute chart. So, you're about to get a 921 cross up there on the 15-minute. The hourly is looking to reclaim. Obviously, it depends on, how it all closes. But, like I said, this is how these patterns play out. If you're new to TA, you just need to start pretty much when you pull up charts, pretty much your symmetrical triangles, your ascending, descending channels, your rising wedges, your descending wedges. Those are patterns you just need to pick up on automatically. Your eyeballs just need to be trained that you don't even have to have the trend lines. I'm drawing trend lines, for you guys. And obviously, I draw trend lines on my own charts. But, I can typically pull up a chart and just start recognizing patterns right off the bat. You got to study those charts. You got to put that work in. So even if it came up here, bounce down, eventually this is going to lead, to a breakout and a push back up, which is typically going to coincide with what I think the overall market is going to do. Let's get over here to SPY. SPY, this is what I'm currently tracking right now. So it's overall, it is in a rising wedge to me, which you can see here that the little bit of support, and this is on the 4-hour chart. We'll get in here to the hourly. So, you can see it was providing support back here in September before it eventually broke down. And then all of the beginning of October, that was its rejections points at that point in time. And then here most recently today, you got a pretty good size rejection off that same area. And so kind of same thing, anytime you have, this kind of motion going on right here in a stock, you're going to see some bouncing around. And like I said, it could continue to push higher. I gave out my ranges on Twitter where I think it's going to be somewhere between 385 to 400, where eventually you're going to get a big breakdown, retest, and then, a push down at that point in time. Overall, I view this as, and let's get in here where you can see the volume at the bottom here a little bit better. This right here, what you're about to see with Apple at the same time is anytime this volume is just constantly going down, but your price is just constantly going up, that is just not a good sign. In my opinion, bulls are not stepping in here, and bulls are not stepping in at key levels. Okay, so we're coming up here, we're hitting some major resistance, and you're just not seeing the volume pick up at this point in time. So another really high quality follow both on Twitter and on YouTube, Dave Marino Jr. If you follow me, you're more than likely already following him, but if you're not, please do so. I retweeted him yesterday where he was just basically saying, there's no volume here for the bulls. So the next big volume that you're going to see, in my opinion and in his opinion, is going to be the selling pressure. I mean, if you look up here on the 4-hour candle, one of my guys in my Discord pointed this out. But this kind of looks like a tweezer top right here, which let me just pull it up here as an example. So here's what a tweezer top looks like, and pretty much what you're seeing on the 4-hour on SPY is going to be. So it's basically two similar, candles, both in, body and wicks. And he asked me, hey, Colin, does this look like a tweezer top on the 4-hour on SPY? And to me, it absolutely does. So even if you get, one more little push up here. So if you're new to TA, one thing I would strongly recommend is just don't. A move is not invalidated until it's actually invalidated. So just like I said, there is potential for SPY to continue to push up inside this wedge. But for me, this move, this rising wedge is not invalidated until you start seeing some daily candles that are closing up here in like the 400 range, okay? So just give it time. Don't be one of those people that's watching 1-minute candles and is like, oh, you're wrong, when the move hasn't actually had time to play out. A lot of the smartest people that I know and I talk to on a regular basis are all overall still very bearish on the market. And so, like I said, take that for what it's worth. Now, one stock that doesn't always move along with the market is going to be Tesla. I told my Discord about this play where Tesla was in essentially a falling wedge or descending wedge, and then it caught a break to the upside, then it created a bull flag, and then it caught another break. So this is what I talk about like in my Discord is, so I post ideas almost every single night. Like here's the Tesla idea. Tesla broke out of its falling wedge, finished a daily bull flag. I would be very bullish on this move continuation if it wasn't for Microsoft and Google earnings. If a big gap down happens, this move can be completely invalidated. If it's holding strong pre-market, might be one on watch for calls. And so what was it doing today on pre-market? Well, in pre-market, it was still trading and moving inside this channel. So it was a great opportunity for calls. Here we are. So like I said, GDP comes out and you see just, big old down arrow. Well, then obviously that move's going to start to be invalidated. You're going to look for a test of the top of the wedge at that point in time. If this thing, though, is hanging out right in here, especially with, with the Twitter acquisition going through for Elon, people not being as scared for Tesla. Now, I do still think overall, just like with the overall market, I do eventually think Tesla is going to see around that 140, 150. So when I'm talking about these plays, I'm not necessarily talking about buy and hold plays. I know that's a retail favorite thing to do, to just buy and hold, buy and hold, buy and hold. And that's fine. So I'm talking more of like making trade opportunities, making money opportunities. This definitely potentially, you get good GDP numbers and the overall market rips, you're going to see some nice movement on Tesla here, especially since it sliced through, a lot of this, volume gaps right here. It starts getting back up into these volume gaps over here, and it can really move quickly, okay? So that's kind of what I'd be looking for on Tesla. On Apple, because Apple's so heavily weighted with SPY, it's kind of a similar story here. I actually tweeted about this one where I mean, once again, we're in an ascending channel, but all you've got is overall, you've got lower bullish volume. The only volume that even breaks from where this move started, the only volume that breaks is going to be bearish volume. So overall, I'm not anticipating good earnings for Apple. Play that as you will, so to speak. You've got right here, though, if we do, clean this up here just a little bit for you guys. If we run an inverse fib, so typically when you're talking about fibs, and I'll just kind of show you guys this here real quick. So if you mark a fib from its low to its high, then that's going to give you, what are my most likely retracement areas. If you go, you can do the exact same thing. It's just the only difference is you're starting at the swing high and going to your swing low. You're looking at it from an inverse standpoint, and this is going to be kind of like what are my potential resistance points on the way up. So you can see here that if I extend this channel that Apple is in right here, which Apple has done this before. I've seen it do it before. Where Apple will just trade. I mean, this is a perfect example right here. Okay, let's go back and look. I mean, this is a perfect example. This is one of those moves that I was fortunate enough to pretty much time the exact top on. I got in a little bit early. But overall, you can see that this price was just moving in an ascending channel, and because it was virtually parallel, it's just, and what it did was it ran into its more macro resistance and then dumped all the way back down. So this could keep running on Apple if it does have good earnings. This could easily take it up to, right around that 160, even all the way up to the 786 at 167 if the overall market is going to keep ripping. Now, like I said, that is not my bias. What my bias is going to be is, especially if Apple, if it moves up to like right around 155 or so, heading into earnings, that to me, and what I will probably be playing is I will be probably playing, some type of short position going into earnings. If you don't know how to play earnings, if you don't know how to play strangles and straddles, do not do that. That is a 100% pure gamble. The worst thing that can happen is you play a way out of the money move one way or the other, and then it doesn't really do that much. What was it? Tesla kind of did this recently. It only finished like $3 or $4 by the time earnings was over, $3 or $4 from where it originally started at. If you bought way out of the money, you just got IV crushed to death, even if you pick the correct direction. So if you don't know how to play earnings properly, I recommend you don't. Okay? I recommend education above all else. That's what my Discord is all about. Google. So each week in my Discord, I kind of do weekly plays where I go over a lot of charts, and well, look at that. That pretty much played out perfectly. So was in an ascending triangle. Overall, this is typically bullish, but due to just the awful earnings, dumped out. I can't imagine Google not coming down here and probably testing its overall 618 at this point in time. GameStop, quickly. It's kind of in a symmetrical triangle. These are typically 50-50 patterns. However, a lot of the times they will break the same way they entered. So obviously GameStop pushed down here. This kind of ties in once again with just my overall feelings of the market is not great. So I typically see this is coming down. Now I do think it'll probably catch somewhere between that 20 even all the way down here to the $19 range. So I don't necessarily think that the move is going to be, downside forever or anything like that, but I'm just not seeing a reason to be overall bullish on the memes. So last but not least, we'll talk about AMC. This is a pattern right here, kind of this longer symmetrical triangle where typically AMC does like to break out of. It has broken out of overall. It's more macro descending wedge that we were tracking for a long time, but I'm going to choose my words carefully here. Just be very cautious about who you're willing to listen to when it comes to technical analysis on AMC. there is just, I would say, probably 95% of the technical analysis that I see performed on AMC on a regular basis is either a lie or it's just complete dog shit, man. Like, it's awful. It's people just drawing straight up lines or coming up with these wild theories, and I just don't see it. So I think what's most likely is AMC is going to continue to track GME in the overall market. Might see, you can ask my Discord where I talked about where I think APE needed a cool off, and where it was going to happen, where if you came up here and made a lower high, that essentially I was looking at this as a 1, 2, 3, 4, and 5. When I first told my Discord about it, 5 was pretty much equal to 1. So I was like, we're either going to get an extended 5 or we are going to get a cool-off period. So it did get the extended 5. But now you're going to be looking at this as at least, it could be an A, B, C. And if it starts to curl up from here, then maybe. Or if you come up here and make another lower high, then a D and an E correction. Okay. Overall, this looks still distributed to me. But if I said GDP numbers are good, Apple's good, Amazon's good, a lot of the overall market I anticipate going with it. Also, too, there is potential news of the dilution or the offering being complete, and that potentially is a catalyst. Obviously, also too, and I'll do a video once we get a little bit closer to earnings, specifically on AMC and what I would be looking for there. So that's where I'm going to leave the video. I hope this was helpful to you. Once again, please like and subscribe. Let me know what you're thinking. If you love these type of videos, I'll be happy to do more of them. Like I said, follow me on Twitter, Colin_Gladman. And most importantly, just be careful who you follow, and if you don't ever hear anything else from me, hear this now. Put in the work yourself. Be your own savior. Be your own hero. Don't rely on me. Don't rely on anybody else. At the end of the day, when you're talking about your money and where you're putting your money, that responsibility 100% needs to be on you. Yes, it's good to have coaches. Yes, it's good to have people you can bounce ideas off. But at the end of the day, know and understand everything that you're doing about your investments. You're going to be a better person. You're going to be a better trader. You're going to be more disciplined. And you are your own boss. So make sure you run the company well. You know what I'm saying? If you don't like the way you look, the way you feel, start working out. Start eating better. You don't like the way where your brain is at? Open up a friggin' book and get to studying. Chart. Somebody messaged me earlier today. My DMs are open. You guys can message me. Somebody messaged me today. What do? I don't even know where to start. And I was like, here's some book recommendations. Here's some YouTube stuff that I like. But most importantly, you just got to freaking start. And you got to be willing to put the work in. You got to pull up those charts and go, I don't understand anything about what's going on right now, but I will. Okay? If I don't understand what's going on, it's just because I don't understand yet. If I don't know what an option chain is all about, it's just because I don't know yet. The most annoying people that are out there are the people who sit around and, they talk on Twitter 24/7. They bang away on their keyboards. But in the last, year and a half, 2 years in particular plays, they've learned nothing and they know nothing more. It's just so much wasted time. Don't do that. Don't be that person. Be careful about who you follow. If somebody is only posting in a bear market, stuff that's only going straight up or it's got squeeze potential or anything like that right now, man, I highly recommend don't. Unless you're following it for pure entertainment purposes or you're taking it with a grain of salt, I just highly recommend be careful about what you let in your brain and in your mind, because whether you like it or not, if you're constantly reading that stuff and you're just like, oh, I hope this person's right, I hope this person's right, when they're not right 99% of the time, and it's always next week, or it's always next month, or it's always this next point of interest or anything like that, eventually that's going to wear on you. And so just be smart about the content that you're letting into your heart, into your mind, because you are going to focus what you feed on, so to speak. So, like I said, hope this video was helpful to you. Much love. I will see you guys in the next one. Have a good one, my friends.